This video is managing fixed assets depreciation. I'm going to walk you through some of the steps of setting up depreciation profiles and value models, as well as showing you how to do a fixed asset acquisition and run a periodic depreciation proposal. Let's start off with the depreciation profiles. They are located in fixed assets, setup, depreciation profiles. You can create an unlimited number of depreciation profiles. These are your depreciation methods, as well as determines the frequency depreciation is calculated. Let me create a new one called Demo. And in the method drop-down, you'll see a number of depreciation methods that we support out of the box. The reducing balance can also be known as declining balance, and when you do reducing balance, you would enter the percentage that the depreciation would be calculated at. There's also an option for full depreciation, and when you mark this option, instead of having to move to an alternate depreciation profile, or as that depreciation method might be a higher amount, the system will look at the service life of the asset, and in the last period of the asset service life will take the remaining depreciation amount. We also have some other ones that are like double declining balance, could also be known as 200% reducing balance or 150% reducing balance. When you're setting up makers for the United States, you would set up a 200% reducing balance or 150% reducing balance depreciation profile, and you would also have another depreciation profile for straight line life remaining. That would be your alternate depreciation profile on the value model, which I'll show you shortly. There are different options depending on which depreciation method you select. If you select manual, you can build a manual schedule, and this is where you would define the number of periods and the percentage or amount to depreciate if it's a fixed amount. If you select factor, you can enter a factor and of how that depreciation would be calculated. A consumption is you would use set up your consumption unit separately from this. It's also the depreciation would be based on the number of units consumed during the period. There's also a depreciation year, so you can depreciate based on the calendar year, which is January through December, or a fiscal year, which will be based on a fiscal calendar. The period frequency is very important. This is used to determine how often depreciation is actually calculated and generated with the proposals. So if you actually want depreciation to be posted each month, you'll want to pick monthly if you're a calendar year, or period if you are a fiscal calendar. If you select yearly, depreciation will only be generated once a year. Let's close out of there. And let's next move to value models. And value models are used to maintain the balance of the asset, the net book value of an asset, or all the assets that are associated to this. You can create an unlimited number of value models. Value models do post into the general ledger. The other option that we have are called depreciation books, which are very similar to value models, except that they do not post into the general ledger. They're just a reporting book. So when you create a new value model, or you're setting up a value model, you enter whether the value model is supports depreciation. You could have some assets that you are not allowed to depreciate, such as land. Then you would enter your primary depreciation profile. And these are based on those depreciation profiles you set up already. The alternate depreciation profile is what the system will switch over to when this depreciation method amounts are higher than the depreciation profile method's amounts. Typically, you can, this is a straight line method, whether it's straight line periodic or straight line life remaining. Next, you can add an extraordinary depreciation profile on here as a default. If you have one on this value model, you can run depreciation proposals for extraordinary depreciation. It is not required. Round off depreciation, do you want it to round to the nearest dollar or to the nearest cents? Leave net book value at, this is what you would enter if you don't want the net book value of these assets to ever go below this amount. Create depreciation adjustments with basis adjustments. What this states is that if you enter an acquisition adjustment or some other adjustment that impacts the basis of the asset, when you run depreciation proposals the next time, it will automatically catch up the depreciation based on that adjustment. That is an optional setup. You can also select a posting layer for the fixed asset. Fixed assets are sometimes depreciated using different methods for local GAAP versus tax versus IFRS. Using value models for your fixed assets will allow you to track different depreciation amounts or values for the assets for the different calculations that you need. They allow net book value higher than acquisition costs, allows you to write up the asset so that the net book value at some point could be higher than the acquisition amounts. And allowing a negative net book value to be used for some assets that you may have some disposal costs associated with, so that you can end up having a negative asset value. You can select a calendar. Calendar again is optional. If you have any of the depreciation methods that are using a fiscal calendar, it would use the calendar assigned to here when it's calculating depreciation amounts. If there is not a calendar assigned to the value model, it will look to the ledger. You can set up derived value models. So the fixed asset can have multiple value models associated with it. So certain types of transactions can be derived. In other words, they're copied. We would recommend that you never set up depreciation transaction types as derived. As I said, it is just a copy, and it does not kick off the proposal. So if the depreciation is ever different, you would not want to set up derived value models for depreciation transaction types. But acquisitions, disposals are very common. Those amounts are typically the same. So if they are the same for your tax book or your IFRS book, then you could enter a derived value model for those types of transactions, and then you only have to enter that transaction once. And the same is also true for derived depreciation books. Next, I'm going to go into the fixed asset posting profiles. Fixed asset posting profiles define the rules for how an asset or a transaction is going to post into the general ledger. There are different types that need to be set up, and obviously at minimum you need to have your acquisition and your depreciation and your disposal set up. If you do other types of adjustments, then you can set up the posting accounts for these. The offset would be the default offset. You do not have to set up an offset account. The main account would be the summary account that would be used. Also important is to set up the disposal posting parameters. So there's disposal sale, disposal scrap. So under disposal sale, for example, you can set up for every value model which post value you want to set up the posting for. At minimum, you must set up for net book value, but you can set up posting for all other types of transactions that would get posted to during the disposal process, where it would, for example, pull the depreciation amounts from the prior years and post them into this account, or the depreciation amounts for this year and post them to the account assigned here. Next, let me open up fixed asset parameters. This is where this is some overall module setup. Again, there's a minimum depreciation amount, so if you never want to depreciate anything less than $10, for example, you can set that up here. Whether you will support the ability to allow multiple acquisitions or not is available. If this checkbox is unmarked and you have multiple acquisitions, the additional acquisitions must be entered as acquisition adjustments, not as acquisition transaction types. There's also a capitalization threshold options around that, and that's used when you're purchasing a fixed asset through the purchase order process, and if the amount is, if you're creating a new asset during the purchasing process, this checkbox will look at that capitalization threshold, and if the purchasing amount is that amount or higher, it will automatically mark the depreciation checkbox for that asset, so that asset is set up to depreciate. If it is below this amount, that checkbox will be unmarked, and so depreciation will not automatically generate for that asset. So you will need to mark it if you do need to depreciate it. Overall module setup is there's including adjustments in current period depreciation amounts. This would, if you do an adjustment in the current period, for example, a reducing balance depreciation calculation always goes back to the beginning of the year to get its basis for calculation of depreciation. If you write up an asset in the current period and you want to include that write-up amount in the depreciation calculation, you would need to have this checkbox marked so that we include that write-up amount when we're calculating depreciation for this period. Otherwise, that write-up will not be included until the following year. There's also an option to allow depreciation when the placed in service date and the disposal date are in the same fiscal year, and an option to automatically generate depreciation adjustment amounts with disposal. So at that point, the disposal process will catch up the depreciation through the disposal date. There's some other options available for setting up your fixed assets modules. There's some accounting rules will give you some default posting profiles, some barcode setup, and some purchase order setup, which will allow you to acquire an asset from purchase order, or you can restrict it to a specific user group that can create new assets or acquire assets through purchase order. Close out of there. Next, I'm going to go into fixed asset groups. A fixed asset group is the only required field when setting up a new fixed asset. And it just gives you some default information when setting up the asset, like what its type is, what its major type is. Do you want to use a number sequence code when setting up the assets? It also gives you the default value models that will be associated to the new asset. So let's go ahead and go into the fixed assets list page, and let's create a new fixed asset to show you how it works. And I'll create one for, let's say, fixtures as an example, and you can give it a name. It defaults with everything from the asset group. You can enter in additional information for the asset, such as its technical information, some insurance information, if you have it insured, what its policy information is, who the agent is, how much it's insured for. The location of the asset, if you're tracking the location of the asset, you can set up asset locations. You can also state when you've last done the physical inventory for that asset, who the contact is, and whether that asset is missing or not. We'll go ahead. If I click on the value models button on top, these will have defaulted from the fixed asset group. I can add new ones if I need to track additional value models. or I can delete any of these. If I click on the General tab, you'll see additional information here. This is defaulting from the value model itself, and I can actually override some of the options here. I can state when I acquire this asset, so let's say I want to acquire it at the beginning of the year. This will be just used if I do an acquisition proposal, and I can enter in the acquisition price, or what I think the acquisition price will be for use with proposals. So we'll just enter $1,000. I can track an acquisition method if I need to. And let me run it to the depreciation tab. All of this is defaulting from the value model as well, and you cannot override it. The value model determines which depreciation method you're using. If you're using a depreciation book, you can override it at the asset level. The depreciation run date is going to default based on my acquisition date, or my place in service date. Actually, the place in service date defaults from the acquisition date. I can change this at that point, and my depreciation run date will update accordingly. The depreciation run date determines when depreciation will start. My service life will default based on my fixed asset group value model setup. I can change that service life as I need to. And if there's any scrap value, I would enter that here. That comes into play when the calculation of the depreciation. And again, we have some additional options on the asset depreciation book as well that you can set up. If you're using the depreciation method on the value model of a reducing balance or a straight line method, you can select a depreciation convention. We support 7 depreciation conventions out of the box. The half year, mid-quarter, mid-month, 15th of month are used by the United States tax laws. There's also a full month depreciation, which means anytime that no matter when you acquire the asset or place the asset in service in a month, you'll get the full month's worth of depreciation. There's also a half year start a year or half year next year depreciation that is used in Europe. So let me close out of here, and I'm going to go ahead and go into a fixed asset journal and create a new one, and I can show you how to run the fixed asset acquisition proposal. Now, fixed assets can be acquired through purchase order or vendor invoice or a general journal as well, so you do not have to go through this step, but this is good when you're trying to just get your system set up. So I'm going to go ahead and just filter this down to that new fixed assets that I created, and go ahead and say OK. And it's going to propose an acquisition transaction based on the information that I had set up on the fixed asset. So let me add the financial dimensions to the asset that might be required. And from a default dimension perspective, I don't necessarily know which dimensions are needed until the system generates the combination during the posting process. So you'll see all your dimensions there. And then I'll need to enter on the offset account as well. If I had set the default dimensions on the asset, I would not need to do this step. So get them all in here. And all right. So let's go ahead and post the acquisition. And what this is going to do is now open up the asset. So if I go back to the fixed asset list page and pull up my fixed asset that I created and just acquired, and then went into the value models, you will see that both of my status of my value models is open. And I can look at the transactions that were created. So there's an acquisition for $1,000. There's also a second value model, which was set up as a derived value model. So when I go into that transaction, I will also see that it was acquired $4,000. The difference is that this one is going into my tax posting layer. So go ahead and close out of that. At period end, what you need to do is generate your fixed assets depreciation journals. So in the fixed asset depreciation journal, go ahead and go into the lines, and I can run a proposal for depreciation, and I can just enter the date that I want to run this depreciation through. I can choose to summarize all my depreciation amounts. I can select certain assets that I want to filter this proposal down to. I'll just go ahead and say OK, and this system is doing now is going through and calculating all the depreciation amounts for this date that I just sent, and it will propose the journal entries for that depreciation amounts. At this point, I can edit any of the depreciation amounts that don't seem correct or that I don't want. So it's just a journal entry. I can edit the offset accounts or any of the accounts as well. Thank you for your time.